Tuesday, April 22nd. If you are watching the edited version, you just saw some new graphics. I got some new graphics in here for you. I'm on a roll with Canva. I'm going to do t-shirts, going to do merch, going to do the whole thing. So it is what it is, but I like the new graphics. I think they're a little bit better. I'm upping my game a little bit, but understand, it's funny because I get invited to speak on podcasts, and I think I'm going to do about 3 or 4 of them over the summer. But what's interesting about it is they all say, hey, I'll have my assistant reach out to your assistant. And I'm like, dude, I don't have an assistant. I don't have a team. It's just me. It's just me. So yesterday, horrible day in the market. I mean, we'll go over it right now. NASDAQ, S&P down, finished sharply low as Trump feuds with Powell. I said it yesterday. Watch out. And what happened? I think I got off done recording at 9:15. At 9:20, the douchebag, he tweets out that he wants to fire Jerome Powell. He's not helping his own cause. If you have money in the market, if you're retired, if you're listening to this for some reason, he is not doing you any favors. He is literally just beating it down. And all you take the phone away from Grandpa. Grandpa needs the phone taken away from him. That's all he needs to do. And stop routing people out to the press to talk about how bad Jerome Powell is doing. You can do it on Twitter. Do it once a day. Don't do it when the market's open. Let the market digest it during after hours. Understand there are smarter people in the White House than you. And from what all reports say, they are begging you to stop this. So, again, they finished down. We're going to go over QQQ. But the stock index futures gain after the sell-off. This is what happens during a downturn, is you get those hyped up rallies and you get beaten down. It's a staircase. It's never just a ski slope. It's a staircase. And you're seeing it right here on the 4-hour. This started February 19th. Remember that date because later in the show, I'm going to show you the world versus the U.S. And it's around this time when tariffs get brought up that the world diverges from the U.S. So understand, it's just, if you look at a weekly chart of QQQ, you can see right here, COVID, 24%. Right here, this was the 2022 interest rate hikes. And this is Liberation Day. Liberation Day looks like effing COVID when the world shut down. So, again, changing the world comes with some stuff, but it's unnecessary to attack the Fed chair. Do it behind the scenes. It's just my thing. Again, it shows the chaos. And I think it's because the Defense Department, to be honest with you, is under investigation. And it's that old trick of, hey, I don't want you to look over here. I want you to look over here. But understand, the only reason I talk about politics is running this market. It is 100% a political downturn. It is confidence in the market. Okay? And I've got a situation for you. The Liberation Day strategy. Okay? See how it put the entrance and exits on this? And see how it saves you during COVID, the 25% downturn. During the 2022 downturn of 32%, it saved you. See that exit right there? See that exit right there, green? And see this exit right here at 8.9% gain, and it hasn't gotten you back in. It's a Liberation Day strategy. Again, 3 historic times when it was time to buy, and you may not have known when to get back in. But the algorithm did. See this one right after COVID? It got in there April 20th, 2020. See this one right after the historic downturn? It got you in here at 313. It got you in 3 or 4 different times before it actually rose back up. This time, it hasn't gotten you back in yet. Okay, after the 24% downturn. This is in QQQ. And you can look on your screen right down here. 302% versus 322%. What does that mean? That means 302% is during the last 9 years when you back test this strategy. The last 9 years, you had 14 positions. Okay, I will show you where the back testing starts. It back tests all the way back here to 2015. Okay, there were times when it got you out, saves you from the downturn. Again, charts have no emotions. This is a formula. This has no opinions in it. There's no PE. There's no earnings involved in this. This is a Liberation Day strategy. 14 positions over 9 years. So it's not like it's trading every day. If you have a full-time job, you can set an alert and just sit back and wait. And what are you giving up? 20%? 20% versus buy and hold? But the key is you know when to get back in. You win 64% of the time. Okay, 64% of the time. Your average win, 22%. Your average loss, 5%. That's how you make money and sleep at night. I'm waiting on this one. I didn't write this during COVID. I wrote the 4-hour algorithm during COVID. It had helped me throughout this entire time. This time, the third time that I got this drawdown, I said, I want a strategy. I built this Liberation Day strategy. I will share it with you. Go over to Linktree. The link is down below. Okay, it looks like this. It's the top one, TRENDSPIDER sale. The Easter sale is going on for another 1 day. Okay, get any of these annual plans, whatever fits in your budget. Okay, whichever one fits in your budget. You can get the standard, you can get the premium, you can get the enhanced. Get the yearly subscription, and I will email you my letter, my welcome letter, and everything that has everything for you to import, including this Liberation Day strategy. And I want to make sure, because I don't want to set any panic off, but this stat, the Dow has dropped 1,000 points 11 times in history. 4 of those have been since Liberation Day. Now, there's a little skew here for all the mathematicians. Remember, the Liberation Day, we were at all-time highs. We were at all-time highs. Again, before Liberation Day, if you didn't know, we had 4% unemployment. We had, a really good economy. And then Liberation Day came. So DIA, which is the Dow Jones Industrial Spider ETF, again, you can see it right here. It just fell off a cliff February 3rd. So understand that as you're at all-time highs on the Dow, it's going to be skewed. So that number, probably not a great stat, but it does show you how quickly we've gone down. But something strange is happening. Okay, this is a newsletter from Kelly Evans. And just to summarize it, stocks down big. The dollar is weak. 10-year bond rates are up. Everything's going in different directions. If any of these happen independently, it might signal worry in the market. It's the direction of these 3 things at the time that sets people into panic mode, because there doesn't seem to be safety. Okay? It's very much a man-made problem. It's another man-made problem where the president finding new ways to push the market down. This is it. I said it yesterday. The panic that is going to happen if Jerome Powell starts to get fired. So I was on Spaces yesterday. Okay. And Scott Redler, there is nobody that loves talking about Scott Redler more than Scott Redler. He is for all those Seinfeld fans, he is Jimmy. But everybody was saying, hey, the market, how, it's just blah, blah, blah. And I went in and I said, hey, I'm going to be the Leroy Jenkins of the crowd. And by the way, half the freaking kids in there don't even know who Leroy Jenkins is. Go and watch it on YouTube. It's one of the most classic game clips you can ever see. Leroy. But if you're in your 20s, and you want to bet on the business, this is the time to get in. Okay? 75% of the S&P is trading under its 200-day. And while they say nothing good happens under the 200-day, when you buy a company under the 200-day and it goes over the 200-day, that's good. And it will go over the 200-day. So I just did this stat yesterday. 22 of the Dow 30 stocks are under their 200-day. 377 of the S&P 500 are under their 200-day. 74 of the NASDAQ 100 under their 200-day. 25 of the 34 in the daily stock pick core portfolio are under their 200-day. So I set up, you can import this. It's a very simple scanner to go and see which stocks are under the 200-day. And I can go over here and I can say under 200-day. Stocks under their 200-day right here. And it'll pull up, it pulls up everything. I think it's in the, I forget, I think I may have left it the S&P 500. But you can see UNH, if we just go to a daily, you can see it in the 4-hour algorithm, or you go to the daily, it's under the 200-day. NVDA at $98, it's under its 200-day. Okay, on the daily. So go and pick which one you want, which stock you like, and if it's under the 200-day, start a position. Again, if it's in one of those 5 stocks that you with 10% or more, if on a pullback, you'll just do it, and I'll put that in the newsletter. Now, all stocks are not, hey, let's just buy and hold this for 10 years. But here's a list of stocks. Hold on. Stop. You can get under that blanket without me coming out there. The value of $10,000 invested 10 years ago. Okay. NVIDIA, it's $1.74 million. Okay. That's 10 years ago. Tesla, it's $161,000. Are you upset if you invested 10 years ago and Tesla all of a sudden is down 40% year to date? Probably not. You may still be holding. I would argue you probably should have traded it, but I've made that mistake. I wasn't investing in Tesla 10 years ago, but I was in 2017, and I didn't buy and hold. Netflix, 123,000. Now, this doesn't seem like crazy numbers, but understand, you want to double your money between 5 and 7 years. Even the cheapest stock on this, okay, is 4 times the money, 5 times, almost 5 times. So this is, these are great companies that have done well. Crocs, I can't believe somebody wears Crocs, but they have grown in 10 years to a $70,000, $10,000 investment. That's great. So pick your winners. Understand good companies with good products, with good profits and good management. That's what you want to do. Doesn't mean you want to buy and hold them for 10 years, but if you've got conviction in it, then buy and hold it. Okay? Trump's DOJ, everyone is saying, well, it's not Lena Khan anymore, but they're going after. I mean, understand, they are going at, this is the first play. They're going after Uber. And Uber was down 3% yesterday. It's down at $72. In pre-market, you're up 1%. But Uber is still a buy. Okay? They say that there were unfair trade practices, blah, blah, blah. I just don't believe it. But I got to tell you, it's still a great buy right here. It's expensive. But I don't think there's another category, another performer in this category that will compete against Uber. And I do think it's a $100 stock. Quant says it's a strong buy. Wall Street says it's an $88 stock, which is still 21% upside. But if the global world is going into recession, if for some reason tourism to the U.S. is taken down, then Uber will get hurt. And Trump's DOJ, they're not doing Uber any favors. Subscription services uses deceptive practice. I'm still a fan of this. I just don't understand this. Today, we're alleging that Uber not only deceived customers about their subscriptions, but also made it unreasonably difficult for customers to cancel. The cancel button is right there. It's just weird. Again, from an administration that was pro-business, getting all of this stuff. We thought we left Lena Khan in the past. No. Now, by the way, yeah. The other thing that the DOJ is doing is the breakup of Google and Meta. I thought that would have been resolved. It's not. But this chart, VEU, okay, that's Vanguard's All World XUS. That's the symbol is VEU. And I did it against the S&P right here because the S&P is the US. Now you'll see year to date, VEU is up 3.8%. Where did it converge? Remember that date? Where did we start diverging? The beginning of February. The beginning of February, when the tariff started. And you've seen it just diverge, ex-US. It follows a pattern after that. You know, you can go over 1 year and you can see how 1 year, the S&P is up 2%, VEU is up 4%. And you go 3 years, the S&P is coming down to meet the world. It's not continuing up. Again, 5 years, the S&P is coming down to meet the world. I don't know if this is right. I don't know if it's wrong. I don't know what it is. But again, the rest of the world seems to be doing fine, or at least better than the US in this thing. Now, let's talk about some of the individual stocks, because Apple is entering its best week of the year, 80% win rate, plus 2.7%. But with Q2 earnings May 1st and 145% tariffs looming, margin risk is at front and center. So again, let's just go and look at the Apple chart. Now, I would argue my 4-hour algorithm is a good one. It got you in at 196. You're trading at 195. Let me go over here to the core portfolio. I'm just used to looking at the core portfolio. So Apple, you're trading up 1% at 195. Did that 196 make sense? I don't know. You got a gap up here between 222 and 214. I think you hit it at some point in time. But again, if you go over to seasonality, and all of this is included in TRENDSPIDER, you can see all the seasonality. We can go back to 2006. And you can see the week that we're in, 80% win rate. Okay, 2.98% gain. This is typically the time when they release earnings. So after the last 19 years, does it make sense? Maybe. I mean, maybe we're in for a surprise. We can go over to Earnings Hub and look. Let's go over to Earnings Hub. What's the expectation? Actually, I have it in let's see, where is Apple? I think it's next week. Yep. There's Apple and Amazon. Apple. So it's estimated $1.61. What'd they report last time? $2.40. Earnings have come down. They pulled forward a lot of those iPhone sales. Maybe we get some crazy numbers. And maybe they just say we can't give guidance. And I just saw a report, by the way, that's not in this newsletter, or it's not going to be in my, that Apple Intelligence is being adopted quicker than we thought. Maybe it's a good one. You know, if we go over here and we look at Apple in the quant, it's expensive. It's still expensive. Okay, the quant says a whole. You're still paying 26 times forward earnings for a year-over-year growth revenue of 2%. That's not good. But Wall Street seems to think that it's a $237 stock. It's a little bit out of line. You can see every time we get up to the analyst recommendations, it just pulls back and then they pull it down. So I don't know that I necessarily trust it, but the quant rating's a hold. Has it ever been a strong buy? Not for a long time. And you've seen great gains through this. At 193, I think it's a steal. I may be a little bit biased. Now, Amazon. Wells Fargo said that they're pulling back on their data center stuff. That is seen as bad. But if these guys start pulling back and actually making more profit, remember, Amazon is the main buyer of Credo chips, and Credo is the number one stock from Seeking Alpha. So maybe that's creeping into this. But Amazon is cheaper than it ever has been, even when it started. Cheaper. It's not good for any hyperscaler after Microsoft pulled back, and you saw what happened with Microsoft. But Amazon's a different business. And what did they say? This is the VP of Global Data Centers setting the record straight, saying, hey, we just changed some things. We're not pulling back. We just changed some things from time to time. And Amazon is sized up by analysts after a 30% decline. Here it is. Raymond James downgraded the cloud computing to outperform. Okay. Bank of America position is undervalued in comparison to Walmart. It's trading at 23 times 2026 GAAP earnings, whereas Walmart's trading at 32 times. Morgan Stanley still has Amazon slotted as a top pick and an overweight rating, but warned the number of macro uncertainties swirling around the economy continue to grow. The firm recently lowered its 2026 earnings per share to $7 and set its price target at $245. Where are you trading right now? $167. That's still damn good. Wall Street thinks that it's a $248 stock, 48% upside. And again, you're trading cheaper than you have been in a long time. You're still paying 26 times forward earnings. But if they continue to grow, the PEG ratio is down at 1.32. So the point is, there is going to be risk in this market, but you got to sometimes pick your winner and just dive. Even though you think it's going to still go down, you dive through it. First Solar, great example. I'm going to bring up the chart on First Solar. But First Solar might actually be a Trump focus because they just placed a 3,521% tariff on solar imports. Okay? And First Solar is not something that I would say, oh my God, we've got to rush into. It's American-made solar products. Now, if you look at a weekly on this one has looked horrible. Ever since September of last year, there has been no reason to get into this one. No hope whatsoever. But at some point, stuff gets cheap. Now, for solar, I don't know if it's cheap. I'm not a big fan. I was looking at other power companies like NEE NextEra, which is basically, I think it's that is Florida Light and Power. But I the valuation, you're paying 6 times forward earnings. Your PEG ratio is 0.18. Growth, 25% revenue growth year over year. Profitability, 44% gross margin. That's not bad. Not great. But again, First Solar, huge imports. And you've got some deals out there right now. Okay. Let's go over NVIDIA under $100. I said NVIDIA under 100. You should pour into this. Absolutely. That was before we realized that NVIDIA chips are actually a political commodity and that China's Huawei, their chips might be a real competitor in China. The risk is there. But the valuation, again, you point out the valuation. The valuation, 21 times forward earnings and a PEG ratio of 0.62. Profitability, where they have 75% gross margin. The momentum sucks and it's a political commodity. Then you have something like Meta and they're under 500. I said buy this all day long if it gets under 500. But then you've got the DOJ trial trying to break them up. You got Temu, one of the largest advertisers, saying they're not going to do any American advertising, which hurts Meta. And then you've got OpenAI saying we're developing a full-on social media platform. Is this one you want to get into? My point with these stocks is there's always risks in the market and there's always noise. Buffett has been lauded, and I am one of them, saying, "Hey, you were right, and you pulled back to cash." And Buffett even said, "If you're right 1 out of 10 times with a stock, it can be game changing." Remember, he's the guy that invested in Oxy last year. We can look at a weekly on Oxy. He was doing this throughout this entire time. He's way down on that. His average purchase price is something like 65. You're at 39. He's not worried. Again, if you're right 1 out of 10 times, that can maintain the portfolio. But there's always risks in the market. First Solar is one. NVIDIA is one. Meta is one. Amazon's one. Apple is one. You just take your pick. Now, Tesla, I can't imagine that Tesla is any good tonight. I think it's, let's see, Earnings Hub. I can't imagine that it's something that, oh my God, I've got to dive into. Their earnings per share estimate, that last time they reported 73 cents per earning per share. This time it's estimated 41 cents. It hasn't traded well. It is at 230. If we look at a long-term weekly chart of this one, it's under its 200-day. You just had the golden cross right here of the 50-day on the 200. The RSI completely, it's 36. The last time the RSI came down here, you were trading about 163. I think that's where you go tonight. If Elon says, hey, I'm coming back, there is no way I want to short this. No way I want to short this. Because if Elon says, I'm leaving Doge and coming back to Tesla, expect this to add 25, 30 points on this, which would be about a 10% move. They're going to rebrand the company a robotics and AI company. That's it. And here's the bear case. Multiple evaluation models indicate that Tesla stock is significantly overvalued. Even if Tesla successfully starts mass production of its cheaper model with a selling price of $25,000, add tariffs onto that, it will be substantially more expensive compared to BYD's cheapest model. It will. Despite Elon's potential to generate excitement, the massive fundamentals risk. Again, they point out fundamentals have not mattered, but this is a bear thesis. Okay, you can go to Seeking Alpha and read it. Then you got the bull thesis. Despite a 40% year-to-date drop, I remain bullish on Tesla due to its diversified revenue streams and potential regulatory tailwinds. Tesla's Q1 delivery miss is minimal in the long run, with the company benefiting from transforming auto industry and stronger non-auto revenues. Valuations suggest a 35% upside, projecting a share price of $325 driven by robust growth in Tesla's energy and autonomous driving segments. I have full self-driving. I took it to my accountant the other day. Works great. Mostly highway driving. I don't want to drive it, use it on the local roads. It just gets more stressful than it's actually worth for me. But here's the bull case. Now, I will tell you the 4-hour algorithm. The 4-hour algorithm. It's been a master on this stock, okay? It only wins 39% of the time, 23 positions. So what's that, 10 times out of 23? But your average win is 19%. Your average loss is 4%. And that's where it helps you, is the 4-hour algorithm. Okay, it got you in here at 251, has you out. There is no way I want to get into this if the 4-hour algorithm doesn't have me in before earnings. I would take that chance if it had me in before earnings. But again, do I see this one popping up to 300? I don't. I just don't. Even though it's oversold here, I just don't see the forward path for this one. And I have made this mistake before. Okay? Tesla, I've made this mistake before. I have looked squarely at that valuation at 90 times forward earnings. I've squarely looked at the PEG ratio at 5 times forward. And I just don't like it. I just don't like it. The revenue growth we talked about, Apple trading at 26 times forward earnings and 2% revenue growth. This has 1% revenue growth. At some point, fundamentals matter. And so am I buying into this? No. Am I trading it on the 4-hour? Yeah. Do I own it? Yep. About $200 worth in my Webull account. You can get a Webull account. It's just my betting account. It's got freaking iBit, NVIDIA, Apple, Google, and Tesla. And I think I have Spotify in there too, because I'm on Spotify. But join Webull. Right there, you get up to 75 free stocks when you do. I use it as a sports betting. And FYI, they are in the prediction market and sports betting now, just like Robinhood. I have $500 in Robinhood in VOO. It's all in VOO. And that was only so I could play HQ Trivia. But this link tree has everything that you need. Okay, right here, Seeking Alpha. You can get the bundle, Premium and Alpha Picks. You save over $159. Or just get Seeking Alpha Premium, where you can look at the quant rating. You can look at the AI analysis. Say you might like NVIDIA. Well, let's take a look at the AI analysis. Well, it's got the competitors, AMD, Intel, Broadcom. Then you've got all the quant ratings explained to you, why those ratings are A through F. Okay. Then you got all the analysis, the positive rates, and the negatives. And then you've got some news. Okay. And it's kept up to date. This last one was done on 4/17. It's a fantastic service, and get it with Seeking Alpha Premium. You get a free 7-day trial and you save $30 off your subscription when you go to my link tree. It is a great, great service. I use it every day. I love, just going down the rabbit hole. I'll tell you one rabbit hole that I went down, and I gave it to paid members on the newsletter, is IAG, I Am Gold. I just looked. It's up 40% since I recommended it. Look, year to date, this one is up 50%. And you want to know how I found it? I went to top stocks right here. And maybe Alliance SE might be the next one that goes up. I mean, let's just look. Year to date, this one's up 28%. Let's go back to top stocks. Maybe you don't like foreign stocks. Let's just look at the first one, PUK. This is Prudential. This is insurance. That's year to date, this one is up 28%. 1 year, you're up 11% versus the S&P. Well, let's chart it. Okay, you look at year to date. Look at that, the orange line. And you can find all the peers, the valuation, the growth, the profitability, all the options charts if you want to see them. All this, everything. I love it. I love this website. Now, we just talked about Tesla earnings. The Magnificent Seven step into earnings arena with tariffs closing in. What do you want to know? They go over Tesla. They go over Microsoft. They go over Meta. They go over Apple. They go over Amazon. They go over Alphabet. They go over NVIDIA. Okay? All the Mag 7. What you want to know in the earnings and some opinions right here, it's all in this article. So again, you're going to have risk in a market. You're always going to have noise. One thing that I don't think is noise, and I said this, Bitcoin shines after a flat week. It's up another 2% today. Bitcoin shines after a flat week as it jumps past 88K, pulls up crypto stocks, pulled up everything. If you want to know crypto stocks, just look. Is it catching up to gold? Here's the quote from this article. Prices gains span more than just Bitcoin. Ether, the world's largest altcoin by market cap, advanced 2.5%. Stellar, up 6%. Avalanche, up 5.5%. Pepe Coin, up 5%. Ondo, up 4%. Dogecoin, up 3.8%. The gains come as US dollar DXY continued its cyclical drop we talked about at the beginning. The dollar is weak. In face of heightened economic uncertainty, many Bitcoin proponents liken the token to hedge against inflation and a weakening fiat currency, given its decentralized nature and limited supply. But then, why is Bitcoin often referred to digital gold, starting at the ascent not only now? Since the start of the year, gold has accelerated by an impressive 31%, coming in stark contrast to Bitcoin's 8% decline. So let's just go and look at it. I mean, let's just look at Bitcoin, Bitcoin versus the S&P. We can select symbols, and I'll just select GLD, which is the SPIDER Gold Trust. And we can look at this, and we'll just go to year to date. Gold Trust is up 30%. S&P down 12%. Bitcoin's down 6%. But, look at what's coming back, Bitcoin. Now, I am no crypto expert, and honest to God, the only way that I invest in crypto is IBIT. I just told you it's in my Webull. Okay? And IBIT is down 6.28%. It's tracking right along. So there will always be risk in a market. It doesn't feel comfortable. And go back to my podcast a few weeks ago. If you're in your 20s, start buying. If you're in your 30s, continue buying. If you're in your 40s, continue buying with an eye on quality. Okay. Yesterday I said, hey, value is outpacing growth. Maybe you want some value. Maybe you want some growth for the rebound. But understand, you should still be buying into this market. And it's not something, my girlfriend, for instance, she said, well, maybe I'll just sell everything yesterday. It's too far down to sell. You shouldn't be looking to sell. And I think I talked her out of it, but she doesn't trade. She looks at this thing once a month. And she's got QQQ. She's got the Mag 7. She's way down. She's also got a financial advisor who I actually said, you should fire him. He's not beating the S&P. The effort's up this year. He's up like 8-10% this year. This is why, again, if you have a financial advisor, maybe they're up this year. Maybe they've lost less than the S&P. If they are losing more than the S&P in this, that's not a financial advisor you want. You want a financial advisor during these times where they can actually save you money. Maybe they're not making you all the growth that I have in the past few years. But you shouldn't be following me either. If you want to follow me, just get the newsletter. Newsletter's over here. Again, it's on the link tree right here. Just go to the newsletter. It's right here. Yesterday's completely free. Why I'm now bullish on Robinhood, Bitcoin, or gold. Value, growth. Is this once in a decade time to buy? Maybe it is. Maybe it isn't. Again, it's a staircase down. You can see how 2022 went. We had that nice March upturn in March. Everybody thought, oh my God, it's going to be. And then Powell just kept raising rates. And then you had the July to August upturn and you went down. It's going to be the same thing. You haven't even seen a huge upturn. You saw it 2 weeks ago, this huge 11% gain on this weekly candle. And everybody thought, oh my God, we're out of the woods. And then what happened? I'm going to fire Jerome Powell. And we're going to increase the tariff pause that I announced. It's not actually a tariff pause. We're just doing things differently. So don't expect it to be done. And you won't know when to get in. But if you want to know when to get in, the liberation strategy has proven a solid one when I back tested it. And so take emotion out of it, get a chart, get the liberation strategy in TRENDSPIDER. Again, sign up while it's on sale. You're saving up to 40%. It's a good opportunity to get this liberation strategy because you want to set an alert when to get back in. And right now, it's not giving you any alerts to get back in. And I bought, during that 11% buy, I bought a bunch of stock, but I still have 20% cash. And that feels uncomfortable to me. I'm looking to get back in. Am I going to get back in on a day like today? Probably not, unless some crazy news comes out and we're up 11% again. But I think as you continue to go along, as we continue down this path, I think erosion of confidence in the market is a real threat. So I'm concerned, but I'm not backing out. So, but I was told by my girlfriend last night, she said, you have a lot more money than most people. And even though the percentage is the same as many other people, it just feels different, she said. And I said, here's the thing. It doesn't feel different to me. I feel poor. I shouldn't feel poor, but I do. And so everybody's in that same boat. So understand, know your risk tolerance. It is all personal. When people ask me, should I do this? Should I do that? I don't know. I'm not you. And I'm not a financial advisor. A financial advisor goes to school for stuff like this. I don't. I just lived through this stuff. And I've lived through several 40 and 50% downturns. It feels different now that I have the wealth that I have. It just feels different. Even though I look at the percentage, I'm like, it's only 2%. 2% loses me more than I made in a year in many, many jobs. So if you have any questions, again, my DMs are open. You can reply to the email. You can send me email right here in Linktree. All the socials are up here. Again, any special that you want, whether it's the Seeking Alpha bundle, Seeking Alpha by itself, or Alpha Picks by itself, whichever you want. The Daily Stock Pick newsletter, I went over Visible yesterday. It's the best. I mean, I love my phone company because it costs me literally $30 a month. I mean, I love it. If you're thinking of buying a Tesla, sign up through me, get $2,000 off and using my referral link. You can join Webull, get some free stocks. Savvy Trader, follow all my trades right there on the core portfolio. If you have any questions, again, hit me up. I'll talk to you tomorrow. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock trading.